Good morning, everyone. Welcome to our Monday morning trading session. Hold on here while I get you my monitor. The market just opened, and it was a rather quiet open, a little bit of a run up from where we left off last week. Take a look here at our Eagle Trend Trader. You can see the market closed way down here and we're opening way up here. So this whole section through here is going to look like a big opening gap. I'm also watching the euro and gold this morning. Of course, the whole thing with Greece is coming to a head today, or has come to a head. So I was curious to see what the North American markets were going to be doing with the euro and gold. So far, gold in a bit of a decline. Here's gold on the Falcon. You can see here is the London Open back here, and gold pretty much plotting lower. Nice late filter entry signal right here. These two are really the same. We got our two little breaks here. These two signals are really part of the same late filter entry signal. Then we got another late entry signal right here. And so the euro, or pardon me, gold in a bit of a decline. And here is the euro. I would have expected gold and the euro to be opposite each other. So gold very active in the overnight. Here was the London Open back here, but you'll notice gold also fell off. Or, pardon me, the euro also fell off. Did a little bit of a recovery, and now they're tailing off again. So we'll stay with it for a little bit. Just the opening minutes here for the NASDAQ. Let's take a look at the NASDAQ here on our Falcon. And you can see that we're a little bit sideways here at the moment. We have a little bit of a trading range going on. It's looking something like that. But overall, we are tending to be a little bit on the bullish side. We don't have a signal just yet. Let's see if the hawk is printing a signal. No, not yet. The eagle, of all things, is the one giving us a signal. And we're just about to flip over the ATR, and the signal is going to print right there. And we're going to cover the trade right here. Yes, come on, move back. Give me a good second push on this trade. The problem with this trade is going to be these highs right here, because we're still, as I highlighted on the Falcon, in this trading range like so. Thanks, Jim. Jim says the advanced decline is very positive this morning. We have 1,900 to the good and 400 or just shy of 500 sellers. So that's a very strong advanced decline figure. The other thing that concerns me perhaps a little bit is this turning into a test of the extreme? And are we going to see the market fail from here? Okay, gold and the euro are both pretty dead, so I'm going to flip over to crude oil, and I may as well see what's going on in the soybean market also. Oh, we did take a tick slip on our trade here. Still very early, obviously. I'll just let that percolate for a moment. Here's crude oil, which opened a little bit earlier than the NASDAQ. They opened at the top of the hour. Good signal that came just maybe right on the open or a few minutes before the open. A nice sell signal. We did get the early sell signal, the early trend change signal back here. The difference, of course, is with the early trend change signal, we always want to see a confirmed test to the extreme. Right? We want to see this failure. That gives us a little bit more confidence taking that early signal. If you take that early signal without the test of the extreme, there's a very real possibility the market is going to try to give you one. So you need to be careful. But crude oil looking bearish again today. I don't know what fuel prices are like in your part of the world, but the oil companies are making every excuse imaginable to try to keep fuel prices up. That's so like the oil companies, isn't it? Somebody's jet must need an overhaul. Good morning, Marlene. Marlene is asking what tick size and what soybean month are you trading? Are you doing November? I'm still in July. You could be in November. November, of course, is the biggest month for soybeans because that's their harvest month. And regarding tick sizes, our tick sizes, I go with the defaults for 90% of the markets, but with a market like soybeans, which trades at $12.50 a tick, I go with a 4-tick hawk. Here's our soybean hawk. And it looks like we're getting a first micro-macro cross signal. Here's soybeans also lacking some sort of direction. And looks like that's going to turn now into a macro pullback. We'll keep a lookout for this, see if that builds into anything. So a 4-tick hawk, a 4-tick falcon, and it's working on a trend change signal to the downside, and a 6-tick eagle. And you can see soybeans have been, well, they were very quiet on Friday. Thursday was a decent day for soybeans. And Wednesday they were very flat, although they were a little bit more active. So nothing really interesting in soybeans at the moment. And you can see the NQ here. We took a flyer at our trade here. Market's still very range bound. This is the last chance for the buyers to get their act together. So what I'm going to do is I'm going to get more aggressive with my stop now. I'm going to look at perhaps where are the parabolics at? No, parabolics are the wrong side. Let's do a bar high low. And hopefully this bar will finish bullish. Well, actually, I'm going to go with this bar anyhow. If they fail here, then it's probably a good time to get out. Get up there. What I'm going to do is hold right here, just below the low of that bar. There we go. The swing strategy is a little better for me on that one. So yes, I'm being very aggressive with this trade, but if it fails here, they're probably going to fail down here also. The buyers stepped up here, they stepped up here, they stepped up here. I'm making them step up there, or I don't want to play anymore. Simple as that. So big tug of war bar here. And it's the type of bar that I will be prepared to follow bar by bar. I won't allow the buyers any other opportunity to fail. Now we're getting this first micro macro cross that we're seeing here in the hawk. Yes, it is a first micro macro cross. Yes, it is tradable. But remember, we are range bound, so perhaps it's the kind of thing you want to reduce your risk on a little bit. Maybe throw a onesie in with a runner, enter below the low, cover above the high, that type of thing. If you're inclined to try it, you see all these yellow bars popping up. Whenever the yellow bars start to print kind of in a horizontal fashion, that means you're in a sideways market. It's one thing if the yellow bars print, and they're heading a little bit lower and there's one a little higher and then they start to head a little lower again. That's different. That actually shows you a little bit of a progression, or vice versa if they're going the other way. They start down here, they go up a little bit, they give you another one here. Again, that shows you some sort of pattern. But where we're at right now, the yellow bars are more or less sideways, well, maybe slightly bearish. But it's the kind of thing where hit my break even. Darn it, I was going to eliminate that. Oh, did they dip low enough to hit my stop? Oh, they did. The scoundrels. Look at that. They just dipped low enough to nail my stop loss. And then they put in a rally. Well, we'll see whether this rally fails now. Jim's asking, Eric, how do I make my Trailblazer have a 25-point stop loss? All right, we go to our strategies window. We highlight our Trailblazer. Remember to turn it off. So you go to the Enable tab, click False, and you need to apply that. Now here at the very top, you have invalid trail stop ticks. You would want to set that to 25. And I think you don't have one here for your fixed ticks, so if you're using the fixed tick all the time, you can set it by default here. You'll have to choose either fixed tick high or low, but that's how you could set it down there. Then when you have all the settings to your liking, go down here to the template manager. And where it says save, click on the box, give it a name, whatever you want to call it, Jim's Raptor or whatever. Press enter, and then it's going to show up. You're going to have saved it. Even though it doesn't look like you saved it, you will save it because it's going to be here under your loads, under your templates. Then when everything is to your liking, go here to enabled, turn it back on, click apply, and voila. Now, if you're using the fixed tick strategy, if you want to be 25 ticks off of the high or low, or close or open, I really don't know why they included the close or open, but they did. So let's say we're looking to buy, and we want to be 25 ticks off of the low. So we go 25 off of the low, click accept. Oh, it's on the wrong side of the market. What you need to do now is throw a minus sign in front of there, because what's happening is the program actually uses a moving average to determine which side of the market to print on. So if you're printing on the wrong side, just throw a little minus sign in front of there. And that's that. That will keep you 25 ticks off of the last full bar, not the current bar, but the last full bar. Maybe that's why they included the close or the open. All right, so that's how you do that. Yes, and John says, don't forget to click accept when you're changing your stop strategies. You always need to click accept to make it happen. Well, we're getting some signals here. We're still sideways, folks. We're trading within this range. We are getting a red bar buy, which we know is a higher probability signal. But honestly, so long as we're in the sideways range, I don't trust any of it, because this could very easily develop into a rule of three type signal. I'm going to throw it in to demo it. If I were trading today with real money, I would let the NQ get outside of this trading range. I think that's the smart thing to do. They're testing the upside again. It could be a little bit more follow through this time, but really they're very uncommitted. Trend change signal here in the Falcon, and a failure or a possible failure on a green bar sell. So I suppose things are looking a little stronger. And here's the green bar sell right here, the green bar sell, and we're looking at a failure of the green bar sell. Remember, these green bar sells, red bar buys, you don't need to necessarily take them on the signal, either with trend or against the trend, because if the trend is going to stick, they're very likely going to develop into first micro macro cross signals. But just looking at our hawk here this morning, you can see the dismal sideways action. Our soybean trade actually working out not too badly, making a nice little progression off of this 4-arrow consolidation slash first micro macro cross slash macro pullback. Had I taken the signal on the hash mark, we would already be at our profit objective, but as it was, I chose to let it take out that high. I guess in hindsight, I could have been a little bit more aggressive with it. At least soybeans and crude oil seem to have some sort of trend to them. The NQ is, we're really just tossing darts with the NQ. Oh, thanks, Josh. Josh says home sales out in 8 minutes time, so top of the hour. That could spark the market a bit. Honestly, though, the way the stock indices have been behaving of late, good news or bad news, it doesn't matter. They just keep going higher. Somebody spins the bad news into, oh, that's not so bad. Home sales are down. Oh, I guess that means people are buying more home electronics. Okay, the NASDAQ will rally. Home sales are up. Oh, I guess people are going to need new TVs and computers, and the NASDAQ will rally. I know here in the Pacific Northwest, the real estate and building market has gotten noticeably stronger than it was even a few years ago. You're starting to see some subdivisions go in and builders actually taking a chance and building some spec housing. They don't do that if they don't think people are going to buy them. Yeah, Curtis is asking, few options for yield, so stocks are higher. It's possible. You know, Curtis, right now, the whole stock market to me is a little bit of a guessing game, and I'll show you why. Just a second here as I build a new chart. Here's the problem I'm having with the stock indexes, and we'll do the E-mini because that's the big boy on the block. Okay, so here's a daily E-mini chart, and you can tell the congestion coming, right? We had a big run up here, and then a little run up, and then a decent run up, but look at how it's laboring to go higher, right? Everybody sees it. Everybody sees this huge price congestion which is building. Some of them are going to see it like an inclining wedge. Some will see it just as a channel type formation. It really doesn't matter. What most traders are fearing is that this is what is referred to as a distribution phase in the market. These types of periods tend to prelude a move lower. Now, this isn't the first time you've heard me mention that the market might be heading lower, and every time I do, it continues to press higher and higher. But this is what a lot of people are seeing, and all this congestion is a concern. And whether you want to blame the Greeks for it or a slower economy or whatever, this is very much leading up to a possible move to the downside, certainly. And look at the bars here. These are daily bars. Look at the bars with these long tails to them. And look at the other side. The tails aren't quite as long, but there's definite resistance to going higher here. If we see the E-mini, for instance, today poke up and leave us a long tail or a long wick here to the upside, then we really have a market that's balanced. And I think you're going to see a lot of traders get a lot more cautious and anticipate something heading lower. Yeah, like Jim says, it almost looks like it's rounding. It's reminiscent of if you throw a ball in the air. Right? These types of moves are easy, well, I shouldn't say easy to spot, but they always look like somebody throwing a ball in the air. It takes off really quick, or a rocket ship, or whatever you want to look at it as. It takes off really quick, and then it arcs and it comes down. Takes off, starts to arc, and comes down. Takes off, starts to arc, and comes down. Well, that's kind of where we're at right now, except we've been arcing for a while. It takes off, and we're arcing, we're arcing, we're arcing. When's it going to start coming down? And it's not, to say that the economy is going to be on the ropes or any of that sort of thing, but it's just that type of pattern that tends to repeat, where it seems to be setting up to head lower. And so every time I buy, I feel, well, I'm a touch apprehensive, especially, buying near the highs. But it feels like, where's the momentum? Am I buying on vapors? What's going on here? You saw we got slipped on our earlier buy. Did we get slipped when they brought us in on this one? I don't think so. No, we didn't get slipped on this one. Speaking of buying, crude oil giving us a trend change signal, or working on a trend change signal here. This is impossible for me to afford, but this is a trend change signal you want to be a little bit cautious with. Not to say crude oil is not going to rally, but what's our trend today? What's our dominant trend? It's obviously down. So whenever you're buying or selling into a dominant trend or an obvious trend, you need to exercise a little bit of caution. So we haven't printed our signal just yet, but don't be surprised if the crude oil doesn't make huge gains to the upside. And for the most part, we're still sideways here. First micro macro cross higher. We did get our price objective on the first micro macro cross lower. I did set this up as a runner, but you know what? On second thought, maybe the thing to do is just go all in, all out. Grab your profit when you have it. Maybe take it above the high, risk it here. Oh, still in manual mode. Let me go back to my risk percent mode. Oh, yeah, I'm only at 1%. I can only afford one contract anyhow. So with maybe a little bit of luck, they're going to challenge the top end of this trading range, which appears to be like so. Yeah. So long as the market is within this range, it's going to be tough slogging. See, more yellow bars, yellow bars, yellow bars, yellow bars, yellow bars. Far too many yellow bars, far too many changes in trend. Anything you do within here is going to be a crapshoot. I'll tell you if something starts to look very promising, but right now I'm showing you why it's hard to trade a choppy market, or why you shouldn't trade a choppy market. Not much on the Raptor either. Thought we might get a double pullback here to the hard edge. We are getting a soft edge sell. We'll leave that alone for now too. All right, so here comes crude now. They are into the hard edge on the Eagle. We're printing double warning dots. I can tell you that if this finishes above here, it will print a signal. It is a trend change signal. Our hard edge on the Eagle is 59.90, so just a few ticks above our entry. But we are taking a bounce off the primary support. The problem here is to buy this, where's our test of the extreme? Is this really all the sellers are going to muster after this move lower? Does that seem reasonable to you? It does not seem reasonable to me. So if we end up buying in here, the problem is the market may try to reach down a little bit, test these lows before heading higher. This is why I was trying to cover below here. The trade manager would not allow me to do it. So my options were either pass on the trade, and really, who wants to pass on the trade? But it is a viable option. In fact, that's all joking aside. That's one of the features of the trade manager, is that it prevents you from taking trades you can't afford. So trying to set that up the way it should be set up, trade manager is saying, no, sorry, Eric, you can't afford that. So I can either dial up my risk amounts, risk maybe 3% of my trading capital, or maybe 2.5%. So there's a 3% loss. Now a 3% loss still not devastating, but certainly not pleasant. It stings enough when I take a $400 loss. Do I want to take a $540 loss? But this is the proper way to set it up. If you're going to take this trade, that's where you want to place your stop. Anything else within here, you're pretty much asking for it. You can't even give the trade a chance to work out. Well, we're in the room here, so not the best looking trade, folks, but it is a trade nonetheless. Here is the problem on our crude oil trade, is the hard edge. And the way this is setting up, to me right now, looks very much like a bear flag, right? It looks like a little bit of a retracement within the trend, and that if the market's going to break, it's going to go lower. It's the opposite of this, right? This is a bull flag here. It's a little bit of a pullback that occurs before the market continues with trend. See, here's the same thing, almost the same thing that we're looking at. In fact, I should draw it down to here. And then we're getting this little bit of a retracement, and then the market doing that. Does that not look very similar to what we're seeing here? I think so too. So fortunately for us, on the crude oil Falcon, which I will bring back here in a second, we are seeing red dots. So that cancels our buying attempts. Now, if the market dips, and then comes back with another buy signal, that one I will take. That one I will have more confidence in, because it will have tested the extreme. It will have tested the lows. The sellers will have had their chance to recover the market, but then the buyers took the market away from them early. That would be the tip-off. That would tell me that, yes, the buyers do have control. Go ahead and buy it. But right now, it doesn't really look like the buyers are exercising a lot of control there. And a little bit of a surprise here on our trade. Oh, look at that. We even got a positive slip on the fill. A little bit of a run up. And I'm going to get a lot more aggressive with my stop, given what happened the last time we got near the highs. There we go. Well done, Suncom. Suncom says both the NQ and the YM gave 10 ticks just now after a trend change and a pullback. I'm all in, all out. I'll take my 10 ticks and run. That's a good call. So note in my journal, I should have left my stop back. So my earlier loss need not have been a loss. I needed to keep my stop back below the low. So when the market is obviously ranging, you need to be a little bit more patient with your stops. All right, here come the sellers right off of the high. And we are getting a first micro-macro cross signal developing here at the top end of the trading range. Wow, the advanced decline very positive still. Jim says it's 2,100 buyers, 700 sellers. The sellers, I think, stepped up a little bit from where they were, but so did the buyers. So they're still hovering somewhere around that positive 1,400. Not really translating into the NQ just yet. I'm debating whether or not I want to take this first micro macro cross while we're still in this trading range. Jim will point out here to me in a moment that we're near the 7 a.m. high, and so we are. Well, my entry is not until we take out the high, so if we take out the high, hopefully we will take out the trading range with it. Yeah, Jim says the NQ is below the 10 a.m. range and the YM is above. Yeah, that's a head scratcher. They don't follow each other like they used to. Well, if they don't get up here shortly, they're going to turn tail. So we did hit our profit objective here on our hawk trade. So soybeans looking a little bit more bullish today. It's a nice little effort. That was actually a good signal that we had there in soybeans. Come on, NQ, get up there. Well, maybe I'm going to take that to break even on our Eagle. And I'm going to let the NQ get outside of this trading range. It doesn't normally bother me if a market takes too long to build a bar. The fact that it takes a longer time to build a bar simply means that the buyers and sellers are evenly balanced. That's all. But there is also nothing wrong with letting them break outside this trading range and then seeing whether the break will actually hold. Is the break going to hold here and will we see a rally? Or Is the break going to fail and bring us well back inside this trading range? If that's the case, then it's not a true breakout. The market's just kind of poking their nose outside of the range, seeing what happens. The thing is, with the first micro macro cross and the scalper, I could probably take profit, which is why I was contemplating buying that. I trust all you fathers had a nice Father's Day over the weekend. I know mine was very nice. Yeah, Michael says you must have played golf. I did. And I played well, except I got a little something going on with my new clubs. I'm sure there's some sort of learning period, but every once in a while I'll shank a ball, which is terribly annoying. Just when I thought the buyers were going to pull it off. Just when I thought the buyers were going to put in push, we see the sellers ganging up on this bar again. If they break the high of this bar, I think we're going to see a lot of sellers jump ship. So I don't know, maybe that first micro macro cross is worth leaving in place. So now it's going to print down here, the first micro macro cross. This is a little bit more aggressive, looking for that renewed buying momentum. Remember, the triangle and hash mark are merely suggestions. There's nothing wrong with postponing your entry, except for you're going to be giving up about 4 or 5 ticks just to get entry, which would take you halfway to your profit objective. I think what I'm going to do is, rather than go all in, all out, if they break the high here, I'll close out the profit order and just see how far it might go. Yeah, Phil says, typical golfer, blame the clubs. Yeah, I know. The pro here likes to say it's not the arrow, it's the Indian. Come on, buyers. Let's pop above that high. Let's go. Nope. I'm going to tap us here, break even in a moment on our Eagle trade. Well, that's all right. Notice well, fortunately for us, regardless of where you were looking to enter, our hawk trade did not trigger, not yet. We're into yellow bars, so let's close that bad boy. Soybeans inching higher. Oh, Marlene's a golfer, she says. How do you think Dustin Johnson feels? Yes, that was a brutal golf course. Marlene's talking about the U.S. Open, of course, which was this last weekend. What a killer golf course. Oh my gosh. That's, I didn't realize that was here in the Pacific Northwest. It's very unlike the style of courses that we see in this part of the world. Ours are normally what they refer to as a parkland style, more with trees, water hazards, things of that nature. This course that they played, for those of you who are non-golfers, was a dune style course, and I know that'll mean nothing to you except that hardly any trees. I think there was one tree on the whole golf course, and didn't somebody try to cut that down? And lots of tall grass. Impossible landscape. It was like playing on the side of a mountain. Lots of swales, lots of bunkers. Incredible length and unreal elevation changes. And it's a public course. Next time I'm down in the Seattle area, I may just check it out, see what green fees are. I don't know if I want to pay too much to be tortured that way, though. I like to have a little bit of fun when I play. It's a beautiful little course in North Bellingham. Actually, Washington State has got a lot of very nice golf courses. I played North Bellingham a few years ago, and it was the first course I played where the rough was like the rough that you see on television, where I was beside the green and my ball was in the rough and I thought I would chip it out. That rough was like steel wool. I had to take my wedge and really whack at it to get the ball out of there. It was incredible grass. Yeah, like Jim says, it's the course was like a course that they carved out in Europe. That those types of courses that you see, where they see the link style courses are different, where they look at the landscape and they really don't change anything. They say, okay, this is where we're going to put the tee, this is where we're going to put the green, and this is the path that you're going to take to get between the two, from one to the other. A parklands course, they do more or less the same thing, but they'll move dirt around, they'll build greens, they'll build tees, they'll build fairways. Yeah, Marlene says that's what a foot wedge is for. You got it, Marlene. You can play at my foursome. One of the golf courses around here, and I'm just talking golf because there's nothing going on. We're not missing anything. Soybeans plotting a little bit higher. Crude oil hitting sideways mode. So nothing really to miss. The NASDAQ still very content to be trading within this larger range, although here we come with a late filter entry signal. I don't know if I want to throw any money on this one or not. We do know the late filter entry is a reliable signal. We're just getting the warning dot yet, so perhaps I'm getting a little bit too excited. We don't have the signal just yet. But one of the golf courses around here, what I was going to tell you is they have these funny little quips and sayings and such on every hole. And one of them was, never play with anyone who questions a 7, which seems like good advice to me. All right, maybe a red bar buy on the NQ. It's still all in this sideways range here. Like I say, anything that you try with the NQ until they get outside of this range is really nothing more than a crapshoot. You could win, you could lose. It's not to say it's not worth trying, just make sure that you keep the risk amount low and that you keep your stops far enough back. Jim says the bank index is making a new high. We'll see whether that pulls the stock index with it. And John did a ton of typing here, so I'm going to share John's golfing joke while we're waiting for something to develop. Well, says Stevie, this is John's joke. Well, says Stevie, I get my caddy to lean down in front of the hole and call to me with his head on the ground, and I just play the ball toward his voice. Tiger asks, what's your handicap? Stevie says, well, actually, I'm a scratch golfer. Woods, incredulous, says to Stevie, we've got to play around sometime. Stevie replies, I agree. But you know, people sometimes don't take me seriously, so I only play for money and never play for less than $30,000 a hole. Is that a problem? Woods thinks about it and says, I can afford that. Okay, I'm game for that. $30,000 a hole is fine with me. When would you like to play? Stevie Wonder says, pick a night, any night. That's not a bad joke, actually. Stevie Wonder, of course, is blind. Oh, John wrote two parts. Sorry, John. I just read the last part. The first part of the joke was Tiger Woods and Stevie Wonder are in a bar. Tiger turns to Stevie and says, "How's the singing career going?" Stevie replies, "Not too bad. How's the golf?" Wood replies, "Not too bad. I've had some problems with my swing, but I think I've got that right now." Stevie says, "I always find that when my swing goes wrong, I need to stop playing for a while and not think about it. Then the next time I play, it seems to be all right." Incredulous Tiger Woods says, "Do you play golf?" Stevie says, "Yes, I've been playing for years." Tiger says, "But you're blind. How can you play golf if you can't see?" Stevie Wonder replies, "Well, I get my caddy to stand in the middle of the fairway and call to me. I listen for the sound of his voice and play the ball towards him. Then when I get to where the ball lands, the caddy moves to the green or farther down the fairway, and once again I play the ball towards his voice." "But how can you putt?" asks Tiger. And then we go to the last part of the joke that I read first. There are blind golfers, and there's actually a tournament that occurs, well, all across the world, but I think there was one scheduled for the Vancouver area this year. And what the caddy does is he lines the golfer up, and I heard a very cute story about a blind golfer caddy who couldn't make it, so he got another caddy to substitute. And the substitute caddy was, this is a true story, the substitute caddy was really impressed with how the blind golfer was playing. He was hitting the ball solid and just playing really well. And on one of the holes, they came up to, the caddy lines up the golfer and he says, "Okay, it's 150 yards to the hole. There's a water hazard about 100 yards out." And all of a sudden, the player duffs a shot. He was playing well, and all of a sudden he hits a poor shot. And then, of course, when the caddy related to the blind golfer's normal caddy, he says, "I never tell him where the hazards are," which, of course, is so true. Whether you're blind or not, you can't help but focus on the hazards if you know they're there. Still sideways here, folks. Oh, wow. Michael says in Florida there's a blind softball league where the ball and bases beep. Jim says the Russell and the NQ are the weakest, so he's thinking the rest are going to follow that lower. We'll see. Yeah, the E-mini, just taking a look here at the E-mini chart, the E-mini still a little bit stronger, you're right, than the NQ. We'll see whether we actually print a sell signal. So we violated this trend line here. If we don't break out this morning, chances are very strong we will see a breakout this afternoon. It's impossible at this point to say whether it'll be higher or lower. However, you know, my suspicions and biases are more toward the downside. We did get to play night golf one time, thinking of the Stevie Wonder joke. We were in a golf course and we played around that day and going for a bite to eat, and we noticed they're advertising night golf, so we inquired about that. And you get a glow-in-the-dark golf ball, and you wear these glow sticks around your neck, and they put glow stick around the flag stick and the tee markers and the hazards and so on. And so we thought, well, that sounds like fun. So we hung out for the night golf, and I played 3 shots worse in total darkness than I did earlier that day, which amazed me to no end. All right, we are getting a first micro macro cross signal here. Of course, no real test of the extreme. In hindsight, it may prove that this was the test of the extreme. Still very, very sideways. You see our first micro macro cross here did not pay off. It didn't trip, thank goodness, but neither did it have any follow through to it. This first micro macro cross here, well, depending how deep you placed your stop, may or may not have worked out. This first micro macro cross did work out. I guess what I'm trying to say to you is, if you're going to try to take this first micro macro cross, recognize that you are still stuck in a sideways trading range. All right, well, I'm just throwing this in because it's a first micro macro cross signal. I'll see whether we can manage it into a profitable position, but I'm not holding out a whole lot of hope for that trade. What does look maybe a little bit better, and this market is also going sideways, but we've actually printed a trend change signal here in crude oil. Good old crude oils, and we're getting a chance here at a test or a retest, a second push on this entry. So here too, what you want to do, I didn't notice that I still have my risk amount dialed up. But here too, you're going to want to cover the trade to the top end of the trading range. As tempting as it is to bring your stops in above this high around 59.70, it's probably best avoided. If the market gets close here to 59.70, it might trade 71, 72, and maybe head lower still. But again, it's important to recognize that the market is sideways. So anytime you are stuck in a sideways market, here's crude oil now on the hawk. Once again, notice all the yellow bar clusters. We are printing a warning dot and a possible first micro macro cross signal lower. But whenever the market is sideways like this, you just recognize you're always taking your chances on a signal. It's not like back here where we have several tests of the extreme, not just one, but at any rate, you could use any of these as a test of the extreme. The market starts to fail. It takes out the swing low or near the swing low, and now we're printing our first micro macro cross. Okay, that's something that you can get behind. That's something that has some structure. Compare that with this. Yes, first micro macro cross, maybe a little bit of structure. We are getting some lower swing highs, but why are we getting higher swing lows? What happened to the sellers? The sellers pushed it down. All of a sudden, buyers showed up. Okay, buyers brought it up. Okay, sellers showed up. Now what? Buyers are coming back again? So that's that whole sideways trading dilemma. You could, if you're going to take this first micro macro cross, probably a good idea to take it below the trend line, maybe even below the low of this bar right here. Although if you fill below the trend line, you're probably going to fill at that bar also. With the hawk, you could be a little bit more aggressive on your stop placement, but the ideal stop still is up here. So we're anticipating that first micro macro cross signal to build. But again, not the best looking signal. Right now, the only signal that was really a strong signal for us this morning was that soybean trade, and soybeans continuing to plot a little bit higher. Looks like I could have stayed with that a little longer. I entered there. Yeah, could have squeaked a few more dollars out of that trade. But that's okay. We did all right. Wow. Jim says the bank index and the DAX both at new highs of the day. All right, so we can get rid of those attempts. Oops. Okay, so crude oil cooperating a little bit here on our hawk trade. They fell off rather nicely, so that first micro macro cross, I guess, did have a little bit of oomph to it after all. Here is our Falcon trade, where I guess I had better get a stop in play. And it looks like they just hit our break even. Come on, get down there now. All right, so it's quite possible our crude oil trade will hit its profit target as crude oil challenges the lows. Soybeans still plodding higher. I guess I did see this eagle trade here, but I was already long soybeans on the hawk. Looks like that would have been a good one to get on board, though. One nice thing, I've mentioned this before, one nice thing about a market like soybeans is once it picks a direction, it tends to stay with it. Here, the eagle the other day, last Friday, was a little bit slower picking its direction, but it did manage one. But this morning has been very nice. And I do believe that would have even reached my double profit objective. Oh no, not quite. But hit our high probability target. So there's soybeans on a little bit of a tear this morning. And the NQ still stuck in the range. I was taking a look at some news sites to see if there was any news on Greece just yet. Looks like Martha Stewart's pretty happy today. She sold her company for $200 million. Ouch. Yes, 200 million might be a lot of money to me, but obviously not a lot of money to Martha Stewart. I guess that company was once worth 2 billion. So that's a good deal for somebody. Yeah, Josh says tomorrow's a big news day. I'm starting to agree with Marlene here too. She says the YM of late has been a better performer than the NQ. So here's the YM. Just a moment as I bring that over for you. Oops. And here's the YM on the Raptor. And it has made a better progression. Nice double pullback, which started building in the overnight. Came out with a buy signal right here, subsequent buy signal right here. The NQ a little more reluctant to commit to the upside, which is not at all NQ-ish. So now we're back toward the bottom end of this trading range, or at least the more immediate trading range. You can take the bigger trading range and condense it now into a smaller one, like something like this. So here once again we got the first micro macro cross. Last time it paid off to the upside. Dare we try it to the downside? Or are they just fishing for stops? Jim's following Elliott waves also. He says the wave count is looking bearish, might see a run to the low. Only problem with the Elliott waves, the theory is sound. The only problem with Elliott waves is they're much easier to spot in hindsight sometimes than they are real time. Well, we'll stay with this market for a few more minutes. I've got a lesson to give this morning at the top of the hour, so we're going to be not top of this hour, top of the next hour. So we might close up shop a little bit early, certainly if things don't shape up here shortly. so that I can get ready for that. All right, notice this is just going hand in hand with the mess that we see signal-wise with the color of the bars and so on. Here we still have our first micro-macro cross signal in the hawk, right? And it keeps retreating. And the higher it gets, the more likely it is that we're going to see a move lower to retest these lows. But what's going on here in the eagle? Oh, the eagle is giving us a red bar buy signal, which is a high probability buy signal. It's coming off of the hard edge. We're still against the ATR, but that only stands to reason given the trading range that we're looking at. Geiger counters pretty evenly balanced, maybe slightly more bullish. The Raptor here too, look at all these yellow bars. Look at this mess of a trading range. Like I said, smart money, stay out of this market until you can get outside of this morning's trading range. Then you might get something tradable. And this is now into yellow bars, so we can cancel that. And now even crude oil is stuck going sideways again. So we managed to pocket a couple dollars out of that crude oil trade before it started reversing. And now they're reversing off of these lows, so very little follow through once they encountered the lows and even breached the lows. This makes me think that crude oil is also going to content itself with going sideways for the rest of the session. About the only market that had any real trend to it today has been soybeans. There's a little signal. Never really looked back. A couple minor hesitations, but overall a good day for bean traders. Josh is asking, does the Geiger counter work on DTS also? Yes, absolutely. Josh, I don't put it on all my charts because it gets to be a little bit cumbersome. Where are you, Geiger counter? There you are. You know, you can put each of the tools on your charts. Like I could have the day ranger on here. Where are you, day ranger? I can put the trade forecaster on here, and I could do this for each of my charts. I need a few more days of data. But if I did that, you know, if I had the support and resistance suite on all my charts, if I had Geiger counter on everything, what happened to my trade forecaster? Oh, I guess I didn't apply it. Where'd you go? I know I'm looking right past it. Where'd you go? There it is. I know there's a way to change its location. There it is. Well, you get the point here. I'm just goofing around a little bit, but there we go. It would just be a little bit much, I guess is what I'm trying to say. If I did this on every single chart, I could, but the data is redundant too. The trade forecaster is not going to change from the Falcon to the Hawk to the Eagle. Neither will the support and resistance lines. They will all be the same on all the tools. Same thing with the Geiger counter, same thing with the Day Ranger. So what I have done is I've just allocated one tool per bird. So I've got the trade forecaster on my Eagle, Day Ranger on my Hawk, support and resistance suite on the Falcon, and the Geiger counter here on the Raptor. But you'll see the data is exactly the same. Where's that thing go? There it is. See the numbers? Exactly the same. All right, seeing a little pop to the upside now off of this red bar buy signal. I just wanted to make sure if you're using the trade forecaster, you want to make sure you have the correct start time. And it's almost always the start time. Well, it's the start time for your clock on your computer. I know some people who change their clocks to reflect the time zone that's native to these markets, and that's fine, but just remember that you change that setting on your trade forecaster also. All right, you guys, it looks like they're backing off of this signal now, off of our red bar buy. To me, I think the market is, they're just going to stay within this trading range for the rest, well, the rest of the morning anyhow. And there's no point in trying to trade anything until they get outside of that trading range. So I think we're going to button up shop a few minutes early here. Tomorrow we'll probably shake it up a little bit more. If you are trading this afternoon, well, there was a little bit of an opening gap this morning, and you know we're trading near the highs. I might be a little bit more inclined to be bearish, but really that's just a guess. You might as well flip a coin, heads we buy, tails we sell, because that's where they're at right now. Soybeans still rallying, Not sure how much more of a rally we'll see out of that market today, but a good strong day for the soybean market. And crude oil entering sideways mode. Okay, you guys, we'll touch base with you tomorrow. Have yourselves a wonderful day, and we'll see you then. Bye for now.